Hello everybody, what's going on? Few important updates are coming from NIO's closed door meeting. CEO Lieben just delivered a profitable roadmap that is not just cutting cost. It's about a fundamental sustainable business transformation. This is the positive shift the bulls have been waiting for, and it makes NIO's story incredibly compelling for 2026. So, what's the biggest takeaway from that Lieben message? A complete change in philosophy. The old game was chasing aggressive sales volume at any cost. The new game starting now is about total gross profit. The company has undergone a complete different change since this year. No longer setting a sales target, how many vehicles must be guaranteed, but pursuing real business result. Now they are paying more attention to total gross profit derived from sales volume into unit price minus cost. This is a subtle but profound change in focus, moving from a pure growth at all cost to high quality organic growth model. Second mechanism, the frontline team now has direct P&L responsibility, calculating the profit of each vehicle they sell. This injects financial discipline at every level. Third, the goal, maximizing the dollar amount of profit, not just the number of cars sold. This is the essence of a mature, sustainable business. NIO is not just talking about this shift, they are already executing it across all three key areas that are already showing results. First, high margin product mix. NIO prioritizing models that bring in most gross profit. The high end premium models like the all new ES8 are now the stabilizing force for performance, boosting an excellent vehicle gross margin of 20% or more. By focusing on these high margin, high demand vehicles, and they have already got huge orders, NIO is effectively raising the average profitability of their entire fleet. Second thing is the supply chain optimization and the cost control. The company is working relentlessly to achieve better supply chain stability and cost reduction. This relentless focus combined with increasing scale is why the vehicle gross margin is already showing sharp improvement, recently hitting the highest level in the years. Lieben is confident this margin will further increase as they scale up. The financial numbers are reflecting this discipline, with net loss in third quarter of 2025 significantly narrowing compared to the previous quarter. Apart from that, they have also the power of three brands. This new shift is a clear sign of maturity. They are moving out of the volatile startup phase into the execution phase of a global automaker. The new CPU driven management system forces every employee to think like an owner, optimizing for profit, not just vanity metrics. Their target is also clear. Management is confident in achieving quarterly break even in the fourth quarter of this year, with the ultimate goal of full year non-GAAP profitability in 2026. Apart from that, they have proprietary edge. They continue to build their structural competitive advantage with proprietary technology and charging swapping infrastructure, which creates incredible customer loyalty and brand power effect. The roadmap to profitability is often volatile, but the management team led by Lee Pin has already clearly laid out a logical, disciplined, and margin focused path. For investors who have stood by the company's innovation, 2026 is shaping up to be the year where that patience will be rewarded. The numbers are moving in the right direction, the strategy is sound, and the market opportunity is vast. The new story is now officially about profit, and that's the most bullish news of all. So get ready for it. With that said, thank you so much for being here. See you in next one.